Okay, everyone, welcome back to another weekly watch list video. This is the heat map here for Friday. And yes, that is an ugly looking heat map. So, we had a very bad day on Friday. We had a bad week. We had a bad month. We had a bad first 4 months to start the year. That's obvious, but the Nasdaq had the worst month since 2008. That's not good. Okay, that's financial crisis back in 2008, and the Nasdaq just had its single worst month since then. So, do you want to be long the tech industry right now? Probably not until you know where the bottom is starting to set in. Because right now, with the Fed tightening and the interest rates, these companies that got so bloated in 2020, 2021 are starting to come back down, and they're trying to figure out where the valuations should lie in a higher inflationary, a tighter Fed year. So we're just trying to wait, see where those valuations lie. A lot of these stocks are still trading historically at very, very elevated valuations. So the stock market is still not cheap. Even with this pullback, the market is still very, very expensive in the tech sector. So, we're just looking here. I mean, Amazon, 14%. Wow, just huge moves. So anyway, let's just get right into sharing the earnings for the week with you guys. These are the earnings. A lot of companies have their reports this week, so keep these on watch. We have our economic calendar. So if you thought last week was tough, this week is going to be even tougher because you have the Fed this week. You have the Fed rate decision at 2 o'clock on Wednesday. You have Powell speaking at 2:30 on Wednesday. It's not going to get any easier from here. We'll see how the market reacts to this. A lot of times you'll get reactions, and then the next day you'll get an opposite reaction, and then you'll get another reaction. So going to be very tough. And then on Friday, you have the non-farm payrolls. So this week, from a macroeconomic point of view, is just insane with the amount of things on the economic calendar. And then you have the earnings on top of that, and you have a market that is in correction. So can this be a week that we maybe don't trade? That's not really that bad of an idea. And if you do, please manage your risk as best you can. So let's get right into the charts. Actually, before I do that, I want to show you guys, this is something that I share every Sunday, and I'm going to share my picks for this coming week later on today. And I'll post those in our Discord. If you're interested, the link will be in the description for you. But this was one of our picks for the week, and it was an absolute beauty. This was Tesla. This was taking puts under 975. And, the reason for that was after the breakout of consolidation, very bearish sign to retrace the move. And that's what happened when it broke out of this consolidation right here. And I'll show you on the other chart after earnings and then retraced the whole move. It was just a matter of time before 975, in my opinion, was going to crack. And that's exactly what happened here. If we pull up the charts, and we could take a look at that here. Hang on one second. All right, so let's take a look here at Tesla on the daily chart. All right, so this is what we were just looking at. The trade was called right here. Right here, we saw the breakdown, and that is a massive move. That's over 100 points, over 100-point move to the downside. So if anyone, has caught that move, let us know in the comment section. That was a beautiful, beautiful call. This was the rejection that I was talking about right here. And then the pullback in one day, very bearish sign there. After consolidation, that should have held up, and it didn't. It pulled on back, and then we saw this, huge sell-off. So that was Tesla. That was a good call there in our weekly watch list. So let's take a look at SPY, and I'm going to look at this. I want to show you guys on the weekly chart. All right. I don't usually use these as I'm a day trader, but trying to figure out direction in such a choppy market has been more difficult using the daily chart, at the moment. But I mean, look at 2022 right here on the weekly. This thing is all over the place. This is not easy to trade at all. So on the weekly chart, if we're looking at this, we have 4 red candles in a row, including up here, this, which would have given us a very good sign if we were looking here at the weekly chart. This candle here is not a bullish candle to close the week like that. And then we saw this, sell off. But what I wanted to show you guys is we haven't seen 4 big red candles like this from a high of 460 to closing at 412. We haven't seen that since March of 2020, that coronavirus. We had 4 red candles here in a row. And then we started to bottom out and then rebound a little bit. So the whole year, 2 years, just about 3 years here, we have not had 4 straight red candles. That's what we got here for this past month. Like I said, April has been a disaster in the stock market. And something else that I noticed was I have the 20 EMA here on the weekly. It's support, and then it acts as resistance. Back here in 2020, the 20 crossed under the 50 moving average on the weekly chart. Well, that just happened again. Right here, the 20 crossed under the 50. Happened here, and this ended up being the bottom of the move. Just something, interesting that I noticed. Am I saying that this is going to be the bottom? I would love for it to be, but I don't know. I don't have a crystal ball. All I'm showing you is this cross here, that happens after a huge amount of selling and then possible rebound. So, maybe this week we finally see our first little green candle. Who knows? We could get a little bit more of a sell-off. Anything is possible. This 337 level, this was where we were before coronavirus. I'm not saying that's where we're coming back. If anything, if we broke this 15% at 405, I think, the possible area that the SPY could possibly come down to would be about the 380 mark. That's if all this broke and if things really, really got bad. That I could see possibly being a bottom, but we'll just have to see if this 15% area holds up. So that's the SPY. That's on the weekly. We can take a look at the Qs. And we're just looking at these from a longer time frame. Usually I'm in like a year, but I'm pulling this back 3 years because I need to know where levels are. And when we're trading and closing on the Qs at the same level that we opened 2021 at, yeah, I'm going to need to pull up bigger charts now because this is where we are. We retraced an entire year worth of gains. 2021, we started out here where we closed on Friday. Just craziness. Very, very bad pullback here. And, we'll see where it goes from here, but not looking so great. Now, the Dow Jones Industrial Average. This one has held up much better than the other two indexes. So this is where I'm really going to, with my picks that are going to be at the end of the video, I'm going to focus on what is outperforming the others. Okay, so the Dow is outperforming the Nasdaq and the S&P. So the Dow for the year is down 9%. The Nasdaq is down for the year 21%, and the S&P is down 13% for the year. So the Dow has relative strength compared to the others. So I'm going to be choosing stocks that are outside of tech and getting into the charts in a second and looking at those charts and the relative strength they have to the rest of the market. If we're looking for trades this week, could be holding up a little bit better. So on the Dow, we're at that 10% correction area, and we have 320, and then 15% would be 315 if that's where it came back down to. So that's the Dow Jones. And now getting into my picks for the week, I'm going to start here with, let's go with Marriott. All right, so Marriott has been very bullish. It's trading over its 50. Its chart looks good. A lot of other charts, which I'm sure you guys noticed, do not look like this. They're not making higher highs and higher lows. So if we duplicate this line here and we put it there, we can see that Marriott is trading in a channel, and it has earnings coming up this week. So I expect their earnings to be good. I think Marriott is eventually, maybe it pulls back a little bit. Who knows where the market's going to open up? But I think this is going to test, the 200 area after earnings. So that's why Marriott's on my list. It's showing strength in a market that's not showing strength. Another one, Home Depot. Now this one can go either way. This was on our weekly watch list last week, right here, okay? Popped up, got rejected at this descending triangle that we're looking for either the breakdown. I mean, it has support here, obviously, but how many times are you going to hit this area before it breaks? I mean, look at this triangle. Look at where this is coming in. It's really consolidating. It's either going to shoot up or break down. And if it breaks down, you got to take puts. If it goes under, this 300, under this 300 area, would probably be a nice low risk entry. If it ever didn't go, you could always cut it on the way back, but this is consolidating and this is looking like that descending triangle pattern that we have seen in the market for so long with AMD and NVIDIA and all these other stocks, Chewy, a lot of those tech stocks that broke down. Now, Home Depot, it's not a tech stock, but it's definitely, from technical analysis here, weak. It's under the 50, it's under the 200, and it looks like it might want to break to the downside. So just keep that in mind. That's Home Depot. That's the second one on our watch list. Another one from previous watch lists as well has now come to that area here of support that I had said would be a good pullback area. So you have resistance, support, You have support here, resistance here, resistance here, resistance here, resistance here. We got the breakout, and now we're back to that area. It could be dangerous when you retrace an entire area back to where it broke out. If this breaks down under this area, I would say this has got to be puts all day, at least getting to the 50 moving average, which isn't really giving you much, but let's see if it holds up here, you know, because we had a very bad day on Friday, which kind of took this down with it. So, you know, keep this one on watch, and we'll see if it has support here, or if it wants to show support at 220. I would also be a buyer there. Maybe we can set some kind of technical level here that we can bounce off of. This could be setting up for that pullback to the 50, which coincides perfectly with this trend line. We touched here, we touched here. Maybe we'll bring it back to 220 before, you know, continuing to move higher. So target, that's the third one on our watch list. And then a fourth one, a stock that we don't really know. I mean, we don't really trade that much, but if you look back before coronavirus, it was trading in the 80s. And now it's kind of been range bound here, and just dialing it in here, it did break the 50 moving average. But it is showing this, you know, higher highs, higher lows type of setup going into its earnings right here on May 5th. This is the wrestling company, WWE. So, you know, we'll see what earnings show, but this is, you know, one of these stocks that's outperforming, you know, and holding up relatively well as the entire market has really taken it on the chin. So that's why this one's on my watch list. And as you've noticed, these are 4 stocks that are not tech stocks. So trying to stay away from those, you know, at the moment. Now, just looking at a couple of these ETFs. This is the energy ETF, Xle. And I just want to show you guys how important technical analysis is. You have an ascending trend line here, a trend line that will act as support as it bounces. Now, when it breaks that level, the best time to get in to continue to go lower, because now it's broken its level, right? It's broken its trend. When that happens, if you get in here, you'll see a rejection again at that trend line. So it rejected here at 77, 72, and then sold back down to 74. So this one is either going to hold up here at the 50 or continue its way down. But the initial pop-up, almost always, you'll see that rejection at a trend line that has been all year in place. So that's the XLE, the XLF. This is another one. We had made a video about 2 weeks ago on this channel and taking puts because we thought that from a technical point of view, that there was a good chance that it could come back down to this bottom trend line. So you have a channel. It's hit the bottom here, back to the top, back to the bottom, back to the top. And then that's where we made the video right around here. So it was probably about 3 weeks ago when it broke down below its 200. And that's exactly what happened. So, you know, it's good to look at these ETFs and the stocks that trade in them, because they're all looking like that too. All the financial stocks have gotten trashed. XLY, consumer discretionary. This one is at a key level. Have all these on watch, guys. These are key levels. If they break, no good. If they bounce, maybe the market will bounce with it. All right, so I think that's going Yep, that's going to do it, guys. So we have 4 stocks on watch. We have 3 ETFs on watch. We're always going to be watching the SPY and the Qs and the DIA, the diamonds for the Dow. Manage your risk this week. Like I said, economic calendar looks crazy. So just manage the risk. And I will see you back on the next one. Don't forget to hit that thumbs up for me, and take care.